Pfizer just increased its dividend by 3%, and also the Pfizer vaccine got approved by the FDA. Hello there everyone, this is the Frugal Investor. In this video, we are going to go deep into Pfizer's dividend history, its dividend increase, and the approval by FDA and its effect on the stock price, and for people who hold this stock for the long term, the dividend investors, how it's going to help them. With that said, let's get right into it. As all of you might know, Pfizer is a drug manufacturer. It's a pharmaceutical company and it manufactures drugs like Viagra, Lyrica, and Advil. The company has been around since 1849. It was founded in New York, so it's been around for a while. Approval by FDA for Pfizer's COVID vaccine is a historical point for the company and the stock. If you look at the last 5 years, Pfizer has seen a growth of 28.96%. The stock price over the last 1 year has seen a growth of 8.45%. So the growth is not huge, but that is generally the case with dividend paying companies. The market cap for Pfizer is $232 billion. The P by E ratio is 14.25, which is below 15. That means the company is undervalued. And that is also generally the case with high dividend paying companies. Their P by E ratio is generally low. But as dividend investors, we are more interested in the dividend. Pfizer pays out a dividend yield of 3.79%. It recently increased its dividend yield by 3%, which is 1 cent per share. So from 38 cents to 39 cents per quarter per share. The annual payout is $1.56, and the payout ratio is 54.06%. That is, they pay out 54.06% of every dollar they earn in profits to its shareholders. The dividend growth has been for the last 11 years. It has seen a continuous increase in the growth of its dividend. Over the past 32 years, the company has never missed a dividend. It has seen a constant increase in its dividend over the past 11 years. The price of the stock does not rise that much, but the dividend safety and the amount increase in the dividend amount is more than enough to cover for that. It has a 2.6 rating on the buy and sell scale. The current price for Pfizer is $41.12, while analysts say the target price is $42, so it's undervalued, which makes it a good buy according to the analysts. Some of the pros and cons of owning Pfizer in your portfolio are: Pfizer has a strong history of paying out dividends from the past 32 years, so it's a solid dividend payer. Continuous increase in dividend from the past 11 years and a solid yield. The dividend has been increasing and there's a good yield. The market cap is $232 billion, which makes it, if not one of the top pharmaceutical companies. It's also manufacturing the drug for COVID-19 vaccine, which is going to make its position stronger in the pharmaceutical industry, and it's also going to put its name in the history books, and it's going to increase its value in the eyes of investors. It has great selling products like Advil, Viagra, Lyrica. Some of the cons of owning this company are: the stock doesn't grow very much. We don't see a huge growth in the stock. The sales have been declining over the past 4 quarters. So drugs like Advil, Viagra, and Lyrica, their sales have declined a lot over the past 4 quarters. There is a huge competition to drugs like Viagra and Lyrica from generic knockoffs. So Pfizer, if it doesn't innovate, if it doesn't bring out more drugs, more new products, it's in a tough spot. In my opinion, Pfizer is a good buy for long-term investors who want to reap that sweet dividend income. It is not a good buy if you want to see huge gains and growth in your stock portfolio, but if you want to reap that sweet passive income from dividend and a continuous increase in dividend, Pfizer is a great buy. I own 20 stocks of Pfizer, and that pays me a dividend of $31.20 annually. So that was a brief overview of Pfizer stock and the company for you guys. If you guys like this type of video, give me a like and comment down below and subscribe to this channel. With that said, thank you for watching and see you in the next one.